Hey everybody, it's Daniel here from Infrares. Hope you're all doing well. So, pretty interesting here. There's a Bloomberg article that comes out saying that Canada is finally in a technical recession. The preliminary GDP numbers came out, which basically shows that, the next report, the next output and growth numbers we're going to see suggest that we could see Canada continuing declining in its growth projections, and basically puts Canada in this technical recession. Now, what's interesting here is that, in the report, it showed weakness across oil, mining companies. It showed weakness among also the agriculture industries, retail, auto sales are also down, right? So a decline throughout these industries. And, not a surprise here, because as I've been saying this on this channel for quite some time, is that we would expect growth to decline, especially with all the rate hikes that have been done throughout the world and also by Bank of Canada, which is going to affect the demand side when you look at the demand supply of, the markets. Now, the supply side of things, as we know, with the disruption of supply chain and whatnot, have been hammered because of COVID and geopolitical tensions, war, etc., etc. But on the demand side, how central banks can influence the demand and supply curve is by affecting the demand side by hiking rates, by utilizing their tools, by quantitative tightening, by tightening the markets further and further to have the consumers feel the pain, right? Businesses to feel the pain, and you're starting to see that, and it's starting to show up in the economy. And that's why you get this headline coming out from Bloomberg saying Canada's in a technical recession. Now, if you remember a couple months back, New Zealand also fell into a technical recession as well. Couple months back, there was an article on that. I discussed it on this channel as well, because New Zealand was one of the few countries out there that hiked aggressively, and one of the few countries that hiked first, right? They started hiking and started to hike rates, I think around October of 2021, and they brought rates above 5%, and lo and behold, right? Although yes, economic data works in a way where there's a lag, and you see the lag effect later. But lo and behold, this year we saw New Zealand also get into that technical recession. Canada was, if you compare Canada versus US, Canada was the first to hike rates when you're comparing US, and that's why you see Canada tipping into also technical recession. So do you see a trend here? Is basically why I'm bringing this up, is that you see a trend that, okay, first New Zealand, right? Now Canada. What's next? The US also, right? And this is not the end. Don't think that, okay, technical recession, we're done here, weakness, maybe another 2 months of weakness, and then we bounce back up. Sure, there's odds. This whole game of trying to predict things is all an odds and probability game. And sure, you could argue, I don't see it, but, some people may argue that, hey, because of maybe the fiscal side of things and, support from the fiscal side and the government, you will not see a recession, or it's going to be very short-lived. Sure, that's the argument you're hearing from a bullish point of view. But from a bearish point of view, what I think is, you are seeing the signs, the cracks are starting to show up. And like I've been saying on this channel, I've been saying this for quite some time, is everything is slowly adding up, right? Let's not forget about the UK LDIs, the UK pension funds almost going bust. Let's, also remember that the regional banking sector, in the US going bust as well, right? And the Fed had to step in. Let's not forget also, you have BlackRock, a lot of the private equity firms, Blackstone, having withdrawal problems, right? Giving money back to their investors because, real estate is not that liquid, and especially the private equity industry, not that liquid as, let's say, stocks. It's not that easy that you can just hit the sell button and get out as easy as let's say the stock market, right? Let's also not forget about commercial real estate, right? A lot of fears around their offices, a lot of companies there going bankrupt, offices that are in trouble because there's not much utilization there, higher interest rates, higher loans, etc., etc. And a lot of these loans are coming due by the end of next year, in 2025 also, 2026. Let's also not forget about the residential renewals in many countries, like for example, Canada. Many people who, like I talked about in my previous video yesterday, actually talked about RBC, discussing about renewals happening, by the end of this year, next year, 2025, 2026, right? So people who are used to the low interest rate environment, and also companies as well that refinance, that got new loans, new terms, also feeling the pain of these higher interest rates, right? So it's starting to creep in, it's starting to work, you're starting to see the signs, you're starting to see the cracks. What's left? Well, what's left is you're probably going to hear also another headline like this in the U.S. saying, possibly a technical recession. Don't know when, but you'll see it. You're probably going to see effects of also the job market, the unemployment rate going up higher, also showing problems within the economy. You're going to see also possibly, the big thing is the credit event. From all this tightening that has been happening, the credit event, when does that kick in? And when that kicks in, definitely you're going to see a much more bigger, worse off scenario if that were to occur, right? Just look at the regional bank example in March, where you could argue that was kind of like a credit event. Also, a year back, the UK pension funds almost going bust, kind of like a credit event, right? All these things are starting to break slowly. Eventually, it looks like, if you get another big event from all this adding up, you can expect that there would be some damage, some panic that may bring in the Fed to come in and do something about it, right? Something regarding to ease policy. But as of right now, there's no signs of any reason to ease other than just a pause to see and assess the situations of how all these tightenings have been done, where does inflation lead to, and how all of this tightening is affecting not only inflation, but the demand side of things, and how bad does it get. So that's going to be the key going forward. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.